Hey everyone, welcome back to another video. We are going to be discussing the ICT breaker. It's a very simple strategy. This is the way I trade it, and I believe it's a very simple yet effective trading pattern that you can use. For those of you that are in the Telegram group, you guys see me outline these setups every single week. It's very consistent, very simple. It takes a little bit of practice to learn, but I believe anyone can learn this. So this is, you can essentially break this down into 5 simple steps. I see a lot of breakers on Twitter, on YouTube, and it's a lot of misinformation. Breakers are not just a trading pattern. You really have to look at the logic behind the move, and there are very specific characteristics in price. And what you guys get from me here is real data. This is tested. All of this has been tested many times. I have years of data to back this up, and this is a pattern that holds its own here in any market condition, and you get this quite often. So I'll show you guys what I look for when we look at ICT breakers. So we discussed this in the Telegram group. We are looking at the hourly chart on the nasdaq. Before I jump into the candlesticks, I want to outline this. So the way I trade breakers, we essentially can break it down into 5 simple steps. Step number 1, we look for a low resistance liquidity run, sell side liquidity. This is essentially going to be our draw on liquidity. So we are looking to be targeting this sell side here. We either want it to be in the form of a equal lows or a low resistance liquidity, where we get the higher lows to the right. So every time price makes a new low, you always want the low to be higher. So a higher low here. So this, say for example, this is our first low. Then we form a swing high. We want the next low to be a higher low. So then we form another swing high. So and the next one would be another higher low. So you guys get the point there. Very simple. After that, so we want to get an expansion move. We get an expansion move that's going to draw us up into a higher time frame premium. So let's actually draw that out. This way you guys can, so you guys won't get confused. So we're looking for price to draw to a higher time frame premium. This can be in the form of equal highs or a fair value gap with an order block, or it can be many things, but main thing is a higher time frame premium. It can be a volume imbalance, it can be a gap. You guys know, you guys get the point. So our second step will be the formation of a swing high, key swing high. And once we get that swing high, we'll get a retracement, and we get our first swing low formation. So this is the step number 3. After we get this low formation here, we get a strong expansion higher. This is the key level here. So this is step number 4. This is essentially what's going to draw into that higher time frame premium. It's going to take out that liquidity, and we're gonna get a strong rejection here, strong move to the downside here. And this is what's gonna be a reversal. This is the smart money reversal that everybody talks about, but they don't actually know how to trade it. I'm showing you guys how to trade it because you guys see me do this in real time. Strong displacement here. We get a break in structure, break in market structure. As soon as we break below this number 3, this swing low, this is a break in market structure. So we're expecting this retracement to we're going to retrace up into a premium, this lower time frame premium, and we are going to be expecting a breaker formation here. So our breaker's already in. We already got our breaker formation. So here's the key point here. Once we rally into here, we want our breaker to be inside of this premium, coupled with a fair value gap somewhere in here, and a bearish order block. If you get all these 3 formations, man, this is a high quality setup, A+ setup. If you get a breaker formation in here, coupled with a fair value gap and a bearish order block in here. Once you retrace up into this premium, optimal trade entry preferably, so above 50% or around the 62% retracement, all the way up to the 79% retracement. And I'll show you guys what I mean, so we don't just look at lines. We'll look at the candlesticks here in just a second. Once you get this move up, you're expecting a nice reaction here, and you're going to be targeting your draw on liquidity here. So this is a very simple bread and butter breaker setup, and I'll show you guys on the candlestick chart here. So remember, 5 steps, swing lows, we form our first swing high. Step number 3, our first swing low. Step number 4, price draws up into a higher time frame premium. Step number 5, we get our swing low formation. That's after the strong displacement, and we break this the swing low. So that's our break in market structure. That's our confirmation that a smart money reversal is taking place. We retrace up into that area where our breaker formation is, with a fair value gap here and a bearish order block inside of a premium, and then price sells off. So let's go ahead and look at the example. So if you guys are on Telegram, you guys saw this. I outlined this key level, 11,500. That's our key big figure, institutional level, very important level. Engineer sell side liquidity. Low, higher low, and then another higher low. So this is just liquidity begging to be taken out. Step number 1. Step number 2. Here. So we're going to skip all this. When market maker sell models play out, they don't always play out perfectly. This is essentially a market maker sell model, but you're not always going to see a perfect market maker sell model like the one I outlined here in this diagram. But just know this is always going to be that liquidity where you're going to draw, where you're going to be targeting. So this is step number 1. You're looking for an area of liquidity that's very, very specific, very looks engineered, and you're looking at this key level. This is that big figure. So we are expecting price to take out this liquidity. First swing high formation in here. So this is the narrative behind this. This is where people get it wrong. First swing low. This is step number 3. Then we get a strong move up into this higher time frame premium. We fill this Sunday opening gap, completely fill it in. This is the step number 4, that key swing high formation. So I actually mark those out for you. So so this is the liquidity, step number 1. Step number 2 is that key swing high. Low hanging fruit entries. Step number 3, key swing low. This is step number 4, that second swing high. This is step number 5, that lower low. So step number 1, we're looking for our draw on liquidity. This is our sell side. These two lows here and this low here. Looking at that big figure, 11,500. Swing high formation. We are rallying into a higher time frame premium. Swing low formation. Then we get a strong move up. That's gonna fill this Sunday opening gap, giving us our second high. This is our step number 4. As soon as we get this second high formation, we see price give us a strong displacement lower, trading below this initial low, giving us step number 5 here. This is our lower low. So once we break below this low here, we confirm our break in market structure because we have filled this opening gap. So we're not expecting price to rally higher above this. We got this this reversal here, smart money reversal here. The low where you see the break in market structure is where you see this that last down close candle before this move up formation. That's the formation of the bearish breaker. This last down close candle before the move up. So this is called a breaker. This is the logic behind it, because this is where we broke the market structure. Essentially, if we're trading higher here, if price can trade down into this, we're looking at a bullish order block. So this is a bullish order block. But once price is not able to get to go any higher, to trade higher from this, we get a strong displacement lower. This now becomes a bearish breaker. This is why they call it that. So now we are expecting price to respect this, but now we're looking for downside movement. So we're looking for sells. And this is what I mentioned earlier in this diagram here. This is that red zone here. The red zone here. These were two red lines. This is very important here. This is where a lot of people get it wrong. Like I said, bearish breaker. This is the hourly chart. Bearish breaker, fair value gap, and this is our bearish order block. All those three key components, man, these breakers are going to be high probability. This is going to change the way you trade. Bearish breaker, fair value gap, bearish order block. Look at this. Look at how price is respecting that level. So now we put a fib on it. We're going to anchor our fib from this high down to this low. Why not this high? Because we formed a swing low here. And then we came back up into this bearish order block, tapped into the Sunday opening gap one more time, and then we got our strong displacement lower here. So we anchor our fib from this high down to this swing low, because this is our displacement move. We wouldn't anchor it from this one because we formed a swing low here, and then another swing high here. So the relevant price action for our dealing range would be here, this strong displacement. So from this swing high down to this swing low, 79% retracement. Look at the candle bodies. Overshot that 79% a little bit, but we are respecting the bulk of this bearish breaker. I have anchored these red lines to the body. Look at the bodies here respecting the look at these wicks here respecting this candle body. Perfect price delivery. We get one more displacement here on the lower time frame, come back into this bearish order block, and then we sell off here. Now look at this fair value gap here. You wouldn't enter on this fair value gap because you were looking to enter at optimal trade entry. You guys know that's what I preach. That's what I teach for you guys. Optimal trade entry. That's the best entry you can get on any trade. Period. If you're not trading the optimal trade entry, you're really selling yourself short, because you're not gonna capitalize on tighter stops, higher risk to reward ratio, and it just makes sense because markets are always moving from premium to discount and discount to premium. So it's really important that you guys stick to the optimal trade entry, because you get a very clean invalidation point. So it's essentially here, your stop loss would be above this swing high here, or you can use it right above the body of the high of the bearish breaker. But just to be safe, you might want to use it on the above the swing high where you anchored your fib. So it's a very, very effective price pattern. But you always gotta look at the logic behind it. So you wouldn't enter here. You're looking for this, but you actually expect that to fill. This could be a nice little day trade slash swing trade. You can hold this for a while because this is an hourly chart. So really, you can trade this on any time frames. This price is frac. It's about as clean as it gets for a price move. Very algorithmic. So much logic behind this move, and it all stemmed from this here. So you always got to look at where price came from. Price filled this opening gap, strong displacement lower, optimal trade entry into an H1 bearish breaker, coupled with a fair value gap and a bearish order block here. 79% retracement. Once more, strong displacement here on the lower time frame. Price comes back in to this bearish order block, and we get a sell-off. Once we take out the swing low, price comes back up. Look how price tags at the low end of that fair value gap. Once more, perfect delivery, and then we trade down and take out that sell side, and we start consolidating. Just very algorithmic. Once we get this bulk move here, this strong move, we got to give it time here, guys. So you can't just jump back into trades every single day. We got to give it time. We got to give the algorithm time to create open float. So it has to engineer liquidity once more. It's just how the game works. This is how it goes. So this is why you guys see me. Patience every single day. That's all you got to do. And if you can do this consistently, you can do so well for yourself. 3 to 5% a month as a beginner. And with the right size account, that's plenty of money. That's more than enough money. And it's so easy to make that if you're consistent enough. So I hope you guys enjoy this one. This is probably one of my favorite videos to make, because I really enjoy trading breakers, whether it's a bullish or bearish breaker. But hopefully you guys enjoy this one. Remember to like and subscribe, and if you're not already in the Telegram group, make sure to join. We're giving out this free education here. See you guys in the next one.